If you ignore this signal from an $11 trillion giant, you really risk being left behind as Wall Street finally gives in to crypto. The very same company that swore they would never, ever touch digital assets just did a complete 180. And believe me, it is not just about Bitcoin. By the end of this breakdown, you are going to understand exactly why Vanguard's reversal is the ultimate validation and what it signals for the next huge wave of institutional money. Okay, so let's get right into it. To really get why Vanguard caved, we first have to look at the market force that just became too big, too loud to ignore. And that was the undeniable success of the new Spot Crypto ETFs, especially with assets like XRP leading a massive charge. Get this, in less than a single month of trading, institutions have already locked up over 366 million XRP. Just let that sink in for a second. That is hundreds of millions of coins literally pulled directly out of the hands of retail and into institutional vaults. Now, what's so wild here is that this shows it's not just some small experiment. We're talking nearly $800 million in assets under management. That proves a massive, completely untapped demand. And this wasn't just, early adopter hype. It was clear validation that investors are now shifting their focus to actual utility. This massive wave of investor demand created this immense pressure. And that's what set the stage for one of Wall Street's most stubborn players to finally break. Okay, so now let's talk about the big holdout. Enter Vanguard. We're talking about a titan of traditional finance, or TradFi, a company that had built its entire reputation on a famously anti-crypto position. And this right here illustrates the sheer scale we're dealing with. With $11 trillion in assets, Vanguard is the second largest ETF provider in the entire world, right behind BlackRock. When they take a stance, the whole financial world listens, period. And for months, they built this incredible wall of resistance. What started as just quiet speculation last fall, it quickly escalated into a very firm, very public denial in January. And then it was reinforced directly by the CEO just 1 month later. They didn't just say no. The CEO went on the record for everyone to hear, publicly declaring that crypto was unfit for long-term portfolios. He called it a speculative asset, said it was too volatile, not a store of value, and then vowed they would not change their minds. This was their definitive line in the sand. But that pressure from the market, the pressure we saw in those incredible ETF numbers, well, it became an unstoppable force. And here's the absolute kicker. Despite every public statement they made, every justification, and that very, very definitive line in the sand, the wall came crashing down. They completely folded. And this wasn't just some reluctant baby step into Bitcoin. No way. Vanguard completely opened the floodgates, allowing its massive client base to access ETFs for the biggest assets in the space, including Bitcoin, Ether, XRP, and even Solana. So their official statement talks about the asset class maturing and how investor preferences have evolved. But come on, let's read the subtext here. The demand from their own clients simply became too powerful, too loud to ignore any longer. So what does all this mean for the bigger picture, right? Why does this one company's decision matter so much to the entire market? It matters because now the two biggest players in the entire world of finance, BlackRock and Vanguard, are both in the crypto game. You've got the first mover and the staunchest holdout, the two absolute pillars of Wall Street, and now both of them have validated the space. When an $11 trillion holdout finally gives in, it sends a crystal clear, unambiguous signal to every other bank, every institution, and every asset manager out there. Staying on the sidelines is no longer an option. This, my friends, is how institutional adoption goes from a tiny trickle to a massive flood. So if you're sitting there wondering, okay, but why haven't prices skyrocketed yet? This right here explains the mechanism. This whole process isn't instant. The huge success of these ETFs is the first critical step. That leads to a supply shock as coins get locked up, which, over time, is the very mechanism that drives price appreciation. If you're getting value from this analysis, please make sure to like, share, and subscribe to Crypto Global News. And definitely hit that bell icon to get regular updates so you don't miss the next big signal. So we'll end with this thought. Vanguard claimed the asset class needed to mature before they would even consider it. But when you look at the timeline and you look at the immense success of the ETFs they were missing out on, well, it really seems like the only thing that truly changed was the amount of money they were leaving on the table.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.